Hi guys, I hope all of you are doing well. This is your Nifty guy. Welcome to today's episode on RSI. This episode is a part of the learning series that we have where I give my take on certain aspects related to trading, not just the daily Nifty analysis. And these videos are seldom and few in between, but I can assure you that it's gonna add a lot of value to your trading. And after you completely watch this particular video, the way you look at RSI or the way you will take trades based on RSI will be changed forever. Now, I am not saying that whatever other people are teaching and saying about RSI is wrong, and this is the only right way to look at it. But this is the way I have been following RSI, and it has worked wonders for me. Uh, will the video will be divided into two parts. First, we'll analyze and do the theoretical part of it, wherein I will try to explain what exactly do I look at when I look at RSI, and then we'll go back to the charts and we'll look at a couple of examples on RSI, right? So there's one big mistake that everybody does when they look at RSI. So RSI doesn't mean a stock is overbought at or the index is overbought at 70 or oversold at 30 in every condition, right? So what people usually do is they will wait for RSI to cross above this and then they think that okay, now the stock or the index, whatever they're looking at is overbought and we can simply short. Or once the RSI goes back below 30, it's in a oversold condition and now it has to turn back, bounce up and they try to buy it blindly here. Now that is something which is a grave mistake, right? And if you are blindly shorting above 70 or buying below 30, trust me, more often than not, you will be hitting your stop losses, right? And the second mistake that people do is they will try to use RSI in isolation instead of using it in confluence. Now, like every one of you know, I am a price action trader and my primary focus is price. I will not take any trade without getting confirmation from the price. Now, the sole indicator that I use, RSI, again, my price has to give me a confirmation before I take a trade based on RSI also, right? It is not simply that if the indicator has given me a short, I will blindly short the markets. No, I will wait for the price to give me a confirmation. Like I always say, let the markets commit to you before you commit to the market, right? So there are a couple of ways to look at RSI. On a bigger time frame, you can look at RSI. So in a strong uptrend, RSI usually stays above 40, 50. That is the average that RSI stays above in a strong uptrend. In a downtrend, RSI would be below the 50 mark or below the 60 mark. And you that is the way you can actually look at what kind of a trend the market is in. Uh, but see, the only way that I use RSI is to find out divergences, right? Now, how do you actually define RSI or how do you define divergence? So RSI basically is a momentum oscillator that is ranging between, I'll just increase the size of this particular panel so that we are between 0 to 100, right? The value of RSI will change between 0 to 100 and what RSI shows is the strength of the recent price moves, right? So what exactly is the strength in the recent price moves? There's a mathematical formula based on which that value is derived. If you want, you can simply Google that, but I don't think that is of any importance to us while we are trading. You don't need to get into the theory of how the value of RSI is derived. If you want, you can simply Google it and you'll get the formula and you will get to know. So RSI, we keep the standard setting, which is there in the you put the standard indicator and that's the setting that we keep, right? And so when I say that when I look at divergences, first I'll try to explain what exactly is a divergence that I want to look at. Firstly, there are two types of divergences that we can look at. One is a positive divergence, one is a negative divergence. Negative divergence is something that we need to look at once we are in an uptrend, right? Try to understand. We are in an uptrend, and for the trend to change, we need to look at a negative divergence. Uh, Similarly, the positive divergence is something that we look at when we are in a downtrend. Say, for example, we are in an uptrend, and where exactly can we look at the strength of the buyers finishing, and we can look at a sorting opportunity or a change in the direction of the trade is something wherein which we can derive by looking at RSI, and this is something which is known as a negative divergence. Similarly, in a downtrend, where exactly should we look at changing the direction based on RSI? And if we get those confirmations from RSI, that is known as a positive divergence, right? So this is something to keep in mind. Now, I'll start with each scenario case. So first we'll start with a positive divergence, right? So for positive divergence, the market on the charts, the market has to be in a lower high, lower low formation. Now, usually, if you look at the uh, price charts and the RSI charts, they move simultaneously or in sync, right? So RSI will also be moving like this, okay? And which means that price and RSI is moving in sync, and that is something which is of no importance to us. If they are moving in sync, well and good. You don't need to do anything. You don't need to act on RSI. What we need to actually do is, say for example, this is the price chart, which is moving in a lower high, lower low formations, which confirms the market structure is in a downtrend. And at the same time, RSI has created a low, and then RSI has not created a lower low. When we are looking at some right now, only talking about the negative divergences. So when we are looking at negative divergence, we only look at the lows, right? We don't need to care about what the highs are. Obviously, we need to ascertain the market trend, market structure using lower highs, lower lows. But then when we're looking for a sorry, we're looking at a positive divergence around here. For a positive divergence, we need to look at the lows. So price has formed a low around here. RSI has formed a low. Just a second, guys. All right. Sorry for the inconvenience. There was some issue with the internet, because of which I'll just start again. So what we were looking at is a positive divergence. So positive divergence, we have to look at it in a downtrend. Market is moving in a lower high, lower low structure. And at the same time, we look at RSI. If RSI is moving in sync, we don't do anything. We need to find where the RSI starts to differ from the price. So once RSI has created this, okay? So this is where we see a a positive divergence in RSI. When we are looking at a positive divergence, we will only be looking at the lows. We'll be comparing the lows. We don't need to care about the highs. Obviously, we need the highs on the price chart to ascertain that we are in a downtrend, right? We are getting a lower high, lower low. That's it. But once we are confirmed that yes, we are in a downtrend, we need to compare and look at the lows that the price is creating, and simultaneously, till around here, there was no divergence. Till around this level, there was no divergence, because similar to price, RSI was creating a lower low. But around here, we see price created a lower low, but RSI created a higher low compared to the previous low. So this is a divergence. Now, once we note the divergence, once we observe the divergence, what we find, what is our key observation is, yeah, now right now the price and the RSI is not in sync. That means something is changing internally, and we need to pay close attention to this particular downtrend, because this can change, right? This, the reason I'm saying this can change is because even with RSI, it is nothing that it is confirmed. If RSI has shown you a positive divergence, the market is going to go up from here. No, we need to wait for price action to confirm and give us a confirmation. But yes, that is something RSI, it alerts us, right? It will alert us that okay, you were in a downtrend. The strength of the sellers here is weakening, because on the RSI you have formed a higher low, and you can look at particular or a possible change of trend in the RSI. And then again, if we see market take this particular high out, a higher high is created, a higher low is created, structure has been changed, and that is where you can plan your long entries based on the positive divergence setup that is there. I hope this is clear. In case if you want to, if it is not clear, please rewind back, listen to it as many times as you want. It might be a bit confusing, but once you start getting to used to looking at this, you will not even need to pay too much time on the charts or too much attention to the charts. You'll simply be observing it, right? Now we'll discuss the negative divergence. Negative divergence is the opposite of positive divergence. We are in an uptrend. Price is creating higher highs, higher lows. Same for RSI, but given at some point RSI will not create a new high as the price has created a new high, right? So there is a clear divergence, right? Again, this is price and RSI not being in sync, not moving in the same direction, in the same market structure, in the same kind of waves. And that is when you get try to, this is your alert. This is not your sign to short the markets yet, right? RSI can also fail like all the other things in trading. The key focus has to be on market structure and price action. And once you observe a divergence, you know, okay, uh, this is something that uptrend might be coming to an end and I need to be cautious and maybe plan an entry on the short side. Or in case if I am in a long trade, maybe I look at booking my profits, right? Similarly, in the case of positive divergence, in case if you are in a short trade and you observe the divergence, you can look at booking your profits based on price action, right? Things will be much more clearer once we shift to the charts, and I'll give you some recent examples. But try to understand it theoretically first. All we need is price and RSI to go out of sync, right? So we'll clear the diagrams and everything. And once again, I'll repeat the positive and the negative divergence, which we have just spoken about. Uh, we need to look at the lows once we are looking at a positive divergence. And in case of a negative divergence, we just need to compare the highs of the price along with the highs of the RSI chart, right? I hope it is clear. Now we will be moving to the chart. Now, the reason why I decided to make this particular video today is there was a trade that I took today based on RSI, and I thought, what better day to? I have been thinking of making this video since a very long time, and I thought, what better day than to make this particular video than today? So today, as you guys saw the market was in a very good bullish uptrend. But in an uptrend also today, I took a trade which was on the short side. Obviously, I took a trade on the long side. That is something that I will discuss in the daily Nifty analysis video, which we do. But for now, for the sake of this RSI video, what we can see here is a clear negative divergence, right? Price was making new highs, whereas RSI was making a new low. Now, in this scenario, tell me, you have observed that, okay, price is making new highs, RSI is making new lows. Do you short the market? Absolutely not, not directly. You need to wait for price action to give you a confirmation, which we got here in the form of a double top. Once this low was taken out, it was a very good entry. And as you can see, you got a very good move on the downside. It usually is not the case, but then again, there was a good enough momentum on the market in the upside. And that was the reason maybe the retracement was also fast enough. And then the recovery was also equally fast. So that is the volatility that is there currently in the markets. But yes, this was a trade based on simple RSI setup that I had used. Market was make I observed a negative divergence, waited for the market to give me a double top, and then shorted the markets around here, booked around here, right? This was an inside bar, and as soon as the next bar also started moving up, that is where I booked the short trade. Try to understand we are above this particular zone, which was a resistance zone for us. Those are the things which I will cover in the Nifty analysis video, but I hope this is a clear example of RSI. Now we will just go back some more in the recent RSI examples. Yeah. So on this particular day as well, what you can see here is while the prices made a new high, RSI made a new low. Just wait for this particular double top pattern and you get a good trade on the downside, right? So this is something which you can look at, or in case if you were riding this particular trend and you observe the RSI divergence, you can look at booking your profits, right? Because RSI is showing you the strength in the recent movement. And once you see that, okay, the strength is, the strength of the buyers is weakening, that means we can look at some down move, some erosion of your profits that you already see on your charts. And why not, why to take that risk? It is much better to book those profits, right? We'll just go back. I had just marked a couple of examples, and then we have a example of a positive divergence around here on this on 6th of June. Market made a new low around the start of the day. RSI did not, and I'll just mark it for you guys. You can look at this double bottom. I'll just zoom the charts a little bit more, right? And explain the entry as well. Market came down, went up, came down, went up. This is a double top, double bottom which has formed with RSI divergence. We can look at taking a long entry at the high of at the break of this particular high, and as you can see, the move on the upside was good, and the SL obviously would have been below this, and we can see a good move on the upside, right? I don't think I have marked more examples than this. What I would want you guys to do is put up the RSI chart. You can just so this is something which is there. You can remove the moving average. That is of no use. It comes as a RSI based moving average. We don't need the moving average. We just need to look at the RSI price action movement. So please try to do a back test on it. Try to find out where you observe this RSI divergences. The same thing, RSI can be the divergence and the divergence which I just said, the positive or the negative, can also be observed on a daily time frame, on a weekly time frame. Now, I'll just give you an example of RSI. If you go back to my videos, because I have been making these videos since around 3 months now, you will find some examples of where I have spoken about RSI. So this low which the market had made, I'll just simply hide all the drawings, right? You can clearly see that markets made a new low at the same point of time. RSI made a new high. This was on a daily time frame, and you can see the reaction from here, right? And what I have also spoken about is an open-ended divergence. So once you spot the divergence, it is not necessary that it's gonna be a confirmation, right? We need for RSI to make a swing, right? Say, for example, when the prices were around the low of this day, RSI was around here. But till the candle had not closed and we got the following day, we were not sure of the divergence, right? Because what if the market price decides to come down and along with it, the RSI comes down and makes a new low? So in that case, the divergence is not there. So that is something that we call a open-ended divergence, and we need these swings on RSI. Basically, the highs and lows that we measure on the that we look at on a spot chart is something we also look on a RSI, and we only get a confirmation of it once it is closed. Similarly, we had observed on at the same levels around here, we had observed a divergence on the weekly time frame as well. So this is the way I look at RSI, simply as a divergence tool. In case if I am in a long or short trade and RSI shows me a divergence, I will look at booking my positions. Similarly, uh, in case if I'm not in a position, but in case if there is a clear trend that I am being shown and I see a divergence, and I will be cautious and I will be alert to look for a entry. Like today, if we took this particular trade in the markets on a very bullish day, if you are still making money on a put side, I think you are doing good in the market. I think I am doing good in the market. And that is something which I would want all my followers also to focus on. Try to keep things simple. Most people, what they do is they try to overcomplicate things. They will put moving averages here. Then there will be a lot of other things. So with RSI, there are a lot of other things. There are trend line breakouts, trend line breakdowns, just like price does in RSI will also take resistance and support from various levels and from certain trend lines, and breakout or breakdowns from those trend lines can also give you some very good trades, but that is something that I don't personally look at. I simply look at RSI to spot my divergences. So just to wind up everything, RSI is not a magic wand, right? It's a supporting tool that, when used with price action, can significantly improve your conviction. If you found this helpful, drop a like, subscribe to the channel, share it with your trading friends and community, and also put down anything that you might have to say in the comments box. In case if you have any questions with regards to RSI, you can put that down in the comments of this particular video. I'll try to answer them in best way possible, right? And yeah, that's it from my side for RSI. I hope I have been able to add value yet again for you guys and simplify yet again another indicator which people try unnecessarily overcomplicate, right? So that's it from your Nifty guy. This is me trying to simplify your trading journey. Uh, yes, we are in it together, and I'll be posting more content about such learning concepts as well. There are not many indicators that I use, so indicator-based things will be less. I am planning a new video on uh, investments and how to look at investment and how to start your investment journey, or which sectors to look at. About again, I use relative strength in investments also. So stay tuned for that particular video. And just a sincere and humble request: do not forget to like, subscribe, and comment on the video. That is the only motivation that I seek from you guys, right? So that's it from my side for this video. I'll see you guys again soon. Hope you guys have a good day. Thank you so much, guys, for watching. Thank you.